Good morning, everyone. Hope everyone is doing good. So let's start at the beginning with few updates. Then we'll go into the FII and DIS data, where the market is going, and we'll also see the open interest analysis. So the few updates we have: the FPI outflow continued 12,257 crores in this September month. FPI bets on auto sector amid GST cut. So this was a positive after GST cut. We have seen the FPI have invested 4,500 crore in Indian auto sector, the following government goods and services tax. This move anticipated a surge in consumer demand. Third will be the equity market shows resilience despite challenges. Fourth will be trade talk with US tomorrow. Our Commerce Minister Piyush Goyal will be visiting US for the negotiation on the advanced trade. So we have to see the positive and negative consensus. And fifth will be the manufacturing sector shows robust growth. So it was exporting rises 2.52 percentage year on year in April to August 2025, because Indian government has initiated the PLI scheme, production linked incentive scheme. So this were the update. The main update you people have might known, the visa fee has been implemented by the president of US Donald Trump from September 21st. So it is $100K for the people who are going to US on work visas and want to settle there. So the company has to pay the visa fee of $100K. So this is good for the US, because Donald Trump does not want any other people to come there and migrate. Those can be a cheap skills, not the white collar people. They are destroying their culture, what the US Donald Trump feels about, and they only need a great, bright, brilliant minds for the US to develop the US country. The AI has been coming very fast, so they don't want to take more people and lose the US people's job there. So we have to see the positive and negative in our Indian stock market. Mostly it is negative for the Indian people, the great new startup, those who want to go for the US on H1B visa cannot visit, and the company does not spend 100K thousand for the people to go and learn or develop the process. So it is negative for our people, but positive for the US. So let's come back to our FIDS data and we'll see what we have for. So we'll compare the data by 6th of September to the Friday's 19th of September. So we have future index, we have option index, and we have a percentage of stock futures and the cash market data here. So we will be checking the data with the four important players, those who get the money in our market and run our stock market. Those are FI and FPIs, DIIs, client are us, and proprietor desk are the very big people like HNIs who also contribute more to our stock market. So let's come to future index. This is long, matlab there are positive, short matlab they are shorting the market. So FII long on September 6th they were 7.4 and short were 92.6. So what they have done, present contract open contracts they have long of 12.9 and short of 87.1. It means they have increased their longs and reduced their short. It means slightly positive but more on a negative side because they are short of 87 percentage. And option index contract call and put, in call minus means there are shorting, there are writers, positive means they are buyers. It can be positive, can be call buyers, put buyers, negative will be writers, call writers, put writers. So on September 6th call FII were having 42,000 of call writing. Now they have unwinded most of the contract and mostly they are on a positive call long buys. So they have 33,000 of call buying, and put they were having 2.84 lakh contracts put buying. Now they have unwinded only 16,000 contracts, so they have still 2.68 lakh of put buying contract. It means still they have a negative view. So they have mostly on a negative side futures and options negative. And we have seen till date the cash flow, the stock market cash flow of FII is negative by 10,963 crores. So they have sold in cash market this much amount till now. So mostly till now what we have seen, the FII have been sold 86,000 crores in the last 5 months. May, June they have purchased, but July, August, September we have seen drastic selling pressure by FII. So I can say the data of FII is negative in our market as of now. So DII, this is a derivatives data, so we'll not compare the DII's data because they are not active in our stock market. So client are the retailers. In future index long they were having 71%. Now they have 71%. Short they were having 28.6. Now they have 29. Round figure it is 29. So no changes. In option index call they were having 24,653 contracts. This is the open contract of call buying. Now they have unwinded most of the contract and mostly there are also on a call writing of 55,000 contracts, so they are also negative now. And in put they were having 4.4 lakh 32,000 crores of put writing. Now put writing also has been unwinded 57,000 contracts, so they have 3.74 lakh of put writing contracts. So they are positive in options and they are also positive in future index. And in September we have seen they have sold for 5,000 crores. This is what client always do. They don't accumulate the good stocks, they always sell the stocks and they go positive in derivatives. I don't know why they do this, gambling, and they want to become rich overnight. Proprietor desk in futures long they were having 67%. In long presently they have only 42%. It means they have unwinded their long by 25 percentage, so hugely negative. And short they were having 33%. Now they have 58% short. It means 25% they have increased on the short side. So here also they are negative. Whereas in option index call they have 16,000 contract. Now they have increased 4,000 contract only, 20.819 thousand contract of call buying. Put they were having 1.10 lakh of put buying. Now they have unwinded put buying by 44,000 contracts, so they have 66,000 contract of put buying. So here also negative and here also slightly negative they are. And the good thing, they are continuously buying in the stock market. They purchased for 5,993 crores in September. So what we can see, derivatives data is neutral and mostly on a negative side by the FIIs and neutral by proprietor desk, and only the client is super bullish in derivatives. So what I can see in the derivative market, the contract has been reduced a lot, less money flow in derivatives, and also the CB is very active and they are not allowing the retailers to trade in our derivative market so that they should not lose, because mostly the big people will only win in this derivative market. So this is a good step. We have seen the CB increased the margin also, and also they have extended the expiry dates. In coming October there will be monthly expiries in Nifty. Anyhow they started with Bank Nifty monthly expiries. Now let's check the open interest analysis. So Nifty expiries on 30 September, the monthly expiry spot price is at 25,352 and future is trading at 25,411. Lot size is 75, PCR is at 1.04. So PCR shows it is slightly neutral to overbought zone. So what we can see, the huge call writer sitting at 26,000. So this monthly expiry Nifty will not go to 26,000, that is for sure. And second, 25,500 also it is difficult to cross in this September month. And what will be the support is at 25,000. So 25,000 will act as a support level and the resistance is at 25,500 for this September month. and we have seen on Friday 25,200 put writer has been unwinded here, and usually call writer has came here, and this could be a profit booking by the call writers, and also can be a call buyer has unwinded. The same thing we can also see here. So this is put yellow is the unwinding portions, red is put writers, and green is the put buyers. So 25,650 to 25,100 we have seen put buying, and people are giving a support from 24,300 to 24,600. Its act has a support levels now. And at call side we have seen mostly the unwinding side, and people are also very much negative. They have done a call writing from 25 to 50, so they are believing it can fall to 25 to 50 from range 25,750 to 25 to 50, and support is at 24,600, and resistance is at 25,200, 25,000 also making a resistance level. So the coming days is like consolidations to a negative side only as per this data. So bank nifty monthly expiry, what we can see, a huge call writing at 56,000 and huge put writing at 55,000. So the range will be 55 to 56,000. Now let's come to the technical side. We will compare the US market, then we'll come to the Indian market. So this is Dow Jones on a monthly candlestick pattern. We have seen there are about all the EMS, that is exponential moving averages of 20, 50, 100, 200, and they are all time high trading at 46,315. Super bullish the Dow is. So in one day chart pattern, same with the Nasdaq. It is an IT, mostly IT shares trade here, and we have seen this is also at a all time high. Non-stop the rally we have been seen in Nasdaq. So VIX, it's a volatile index. We have seen it is at 15.46, very much neutral, and this shows the fear index. Also there is no fear in the US. Everything looks good. So let's come to Indian market. The Indian VIX at 9.96 came to a single digit. So here what we can tell, here also we don't have any much negative news nor a very much positive news also. This is considered as neutral, but very low VIX will not give a very bright future of India. So it is only a slowdown what it can show, and it is very bad for the option buyers. The premium will decrease a lot. So if you ask me how this volatile index has formed, this is due to the huge volatility in the derivative market. When the people are hugely buying calls or puts, it shows bullishness or a bearishness also in futures. So this has been created with the derivatives data only. So we have seen the less number trading in derivatives, and that's why this has coming down. So let's come to Nifty 50. In one day time frame, we have been trading above all the exponential moving average of 20, 50, 100, 200. This is a positive sign, and we are almost consolidations and almost trying to reach the all-time high. But this candle, what it is showing as of now, a shooting star, next to a shooting star, not exactly shooting star, but it shows a consolidation to a negative side. Here we can come down or we can trade in a negative only. And also the news flows is on a negative side, and VIX is also at negative side. Option data also on a negative side only. So going long can burn your pockets in derivatives, but what you can do, picking a good stocks, that can be a good idea. So bank nifty, we have been trading above all the exponential moving average, and here also has been formed the same pattern. We can see some consolidation are falling down as per this two candlestick pattern. We are not going long from here. And also we can see a double bottom kind of a pattern in bank nifty. So we can see a correction here, then we can see a retracement, then we can break out and go up. Anyhow, the OI change we have seen for September is consolidations only. for Bank Nifty. So for bank, what I can say, so also we have seen a 25 basis point rate cut in US, and the same thing can apply in Indian MPC monetary policy, that is on September month end, 30th September or on early of October. So we have to see if it is happening. So it is a very good news for our market. Now it is at 5.50 repro rate. It can come to 5.25, and the consumer buying will increase in Indian market. That good for banking stock and also FMCG side also, if it happens. So let's meet on the next weekend and we'll see repo rate cuts and how the market is going to perform. For as of now, we don't have any positive sides and we are only on a negative side, and we can accumulate good stocks and also mutual fund SIPs we can increase. So that's all from my side. So please do like, share and subscribe to my channel. Take care. Bye.